Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Good afternoon and welcome. My name's Andrew Thake from Mines and Money. I'm just welcoming you to our pitch battle heat number 1. Your host for today is Jochen Staiger from Commodity TV. Delighted to have you back, Jochen, and over to you to introduce today's contestants and investor judges.
Yeah, Andrew, thank you very much, and pleasure to see you all here back again, and very warm welcome also from my side to this mining pitch battle. As said, my name is Jochen Staiger. I'm the founder and chief editor of Commodity TV and Rohstoff TV, and it's my honor and pleasure to be the MC and moderate this session here today. As you know, this is a mining pitch battle, so we have 4 companies who are fighting against each other in 3 minutes presentations. Afterwards, we have 5 fantastic judges who will ask questions and really roast them. It's something like Dragon's Den, and as I see some German names like Höhle der Löwen, as you know it. And afterwards, we will see a final decision from our judges who will win, unfortunately, a virtual $1 million. And let me first introduce our contestants here. Our first company would be Steppe Gold with Aneel Waraich. Then we would have Cartier Resources with Philippe Cloutier. And then we have Brendan Yurik from Electric Royalties. And afterwards, JC St-Amour, who is from Infinite Ore. Look really forward to our presentations, of course. But also very important are our judges. And we have here Mark Burridge from Baker Steel Capital Managers. Then we have George Cheveley, who is from 91. Then we have Martin French from London Specialist Capital. And we have Per Wimmer from the Wimmer Family Office. And last but not least, Joe Mazumdar from Exploration Insights. Also to you guys, very warm welcome. Listen very carefully, and I expect really tough questions, and also hope that we get a lot of that we get a real lively discussion here. You will wonder, because this is quite new. That's my brother here, and we make sure that everybody is staying in time. And we're gonna start with Aneel Waraich from Steppe Gold. Aneel, I would say the floor is yours, and I will start my countdown here.
Excellent. Thank you, Jochen. Thank you, everyone, for joining today. I'm excited to be here again. So for those who are new to the story, we're Steppe Gold, listed on the main board of the TSX. We are one of the world's newest gold producers, having started gold and silver production in April 2020. We are located in Mongolia, where we're purely focused on precious metals and building out Mongolia's premier precious metals company. Next slide. So today, Steppe Gold has an operating mine, which we're now expanding into our phase 2 expansion later this summer. So we started with just over 1 million ounces that we purchased from Centerra Gold in 2017. It was a fully permitted and licensed project to build a CIL plant, a flotation circuit, and a heap leach. What we did is take a phased approach and build a heap leach first, which is the oxidized material from surface down to 40 meters. We're now in commercial production, having produced during our startup and ramp up, which we're still in, just around 35,000 ounces last year at an average cost of about $750 all in. So it's a nice starter project. It's robust in terms of economics that will actually fund our exploration and our expansion to phase 2. Our phase 2 is going to be a CIL plant and flotation circuit, which we are completing a revised feasibility study on this quarter, Q2. It should be completed by end of June this year, and we'll start construction this summer. So it's a seamless expansion into phase 2, which is building a CIL plant, flotation circuit, tailings facility, adding some tanks, but all the heavy lifting in terms of road, the civils, the camp, water, all there and complete. We currently have just under 70 million shares outstanding. over 30 million US on the balance sheet that will continue to grow from cash flow from the phase 1 operation. And we will look to take on additional debt this summer to expand into the fresh rock ores. In about 2 years, we'll be producing from the CIL plant and flotation circuit, which should be about 150,000 ounces on a gold equivalent basis for a circa 10-year mine life to start. Our team has built a company in the past and sold it for $500 million in 2010 and 11. So we have a track record of execution in Mongolia. We have strong backing from the Mongolian government, sovereign fund. Eric's brought family offices from around the world, and newly Fidelity International that owns just under 5% of our company today. So we have some very strong backing that we think will continue to grow in the coming months and quarters as we expand. Resource expansion, we've grown our 1.2 million ounces, next slide please, 1.2 million ounces into 2.45 million ounces resource update just a week or two ago. So while building our first mine, we've actually expanded our resource to 2.45 million ounces. So we've had some success while bringing production online. Excellent.
Thank you very much. Those were your 3 minutes, Aneel. Thank you. Please clear the screen here. So, and now please from our judges, whoa, can I see them all here? Who has the first question? Raise your hand, please. Yeah, Joe.
Hi, thanks for that presentation, Neil. Much appreciated. I mean, you're in Mongolia, obviously, you're fully exposed to Mongolia, and you're thinking about taking on more debt. Is the debt, very expensive for you to get in Mongolia for your asset that's only in Mongolia?
Yeah, sure. Well, actually, we are focusing on getting as much as we can from within Mongolia. We have very strong support there, as you can imagine, and US denominated debt could have a lot of interest within the commercial banks within Mongolia. This is an expansion project, so it's not our first mine that we're building, so we have a very strong track record of execution. So it's a lot easier to get debt on more favorable terms when you're expanding. It's not a greenfield build, right? So this is a brownfield expansion. All the heavy lifting and permitting is complete. We have our own cash flow. So if we, while we're expanding and building our phase 2, we're actually producing. So we have 3 to 4 years of production from our starter mine that actually adds additional cash flow and cash to our balance sheet while we're taking on debt. So we're in a much more favorable position to get more plain type vanilla debt, which we're going to explore first.
Thank you.
Yeah, no problem.
Yes. Who is next? Per? No, sorry, Mike. Mike Burridge.
Yeah, thanks, Aneel. It's been a great story in terms of doubling the resource while going into production. I want to talk about the exploration side of things. You've doubled the resource. Tell me more about the exploration upside beyond that, where you see targets around the mine or on your property package, and maybe how that feeds into the decision you made to move immediately to phase 2 expansion rather than wait to see what more you might have and right size the plant for the full potential.
Yeah, sure. Thank you. Well, yeah, we haven't done a lot of exploration per se. So in the last couple of years, all of our drilling has been focused on extensional and infill drilling on the 4 deposits, ATO1, 2, 4, and the new deposit, Mung. They're all open at depth. So we've only drilled to about 400 meters vertical depth. So there's still a lot of room for expansion at depth at all 4 deposits. In fact, ATO4, we've actually increased the resource size where it was originally to be thought a constrained carrot-like pressure pipe, and now we've extended it very similar downward plunging component like Munk. So in terms of exploration, there's a lot of upside and opportunity that we haven't had the chance. We didn't have the time or the money in the last couple of years to focus on it. So this year, with the resource expansion as a nice little new base, we have the ability to chase all deposits at depth, but also now we have a 20-kilometer trend north of Munk that we can now start stepping out 1, 2, maybe 5 kilometers and look for some satellite discoveries in deposits. So this is the first time we're actually ever get to do that this year. So in about May timeframe, we'll start that process, mobilizing a couple of drill rigs and stepping out. This is just located south of Russia, where you have large epithermal gold deposits just like ours that are 5 million plus, 10 million plus on the similar trend that goes into Russia, about 100 kilometers north of us. So the scale potential certainly exists. We just haven't had the time to focus on it. So the second question in terms of expansion, we believe that the right size is somewhere where we're starting here, because we took a base from Centerra we're now revising it with a newer resource and newer base. So 150,000 ounces of gold equivalent production is fine for us. It will be over-spec'd to allow for that increase if we want to increase our production profile by 25 to 50,000 ounces. Should we encounter additional reserves, before we bring production online. But we're more than comfortable bringing it online and continuing to extend the mine life, as well as increase the current profile, which will be over-spec'd.
Thanks. Okay, thanks. Per, you are next.
Yeah, what's the capex on your second phase as you go into that? How does the timeline look like? And also, will it lead to dilution in terms of your all-in sustainable cost per ounce? And finally, what's the interaction with the government and their take of the profits, and also any sort of friction or good things as to the Mongolia side of things?
Sure. Well, I'll start backwards if that's okay. So from the last question with the government, I think I mentioned the government is an investor. So the newly established sovereign fund just over a year ago put in $3 million US into the company. It was our first ever investment into a mining company, and it was into Steppe. So clearly we're doing things properly. We have the endorsement. And when I mean things properly, always when we set up in any jurisdiction, when you set up a mine, you should always be as local as possible. So today our CEO is Mongolian, half our board are Mongolian, and 99% of our staff in country are Mongolian. So we're getting the support in country by doing things properly. In fact, the government advanced us $10.5 million US of debt last fall as part of our tranche one or lead order for the debt for the expansion this summer. So that's sponsored by the central bank. So I think we have the support by them being involved in many ways. It's a 5% government royalty they get on production and 25% corporate tax, and that's it. So I think they're very supportive, and it's a good regime. In terms of capex, you're going to be looking at about 150 million US. We're finalizing those numbers now, so by end of June we'll know where it sits. But assuming 150 million US, that's where we have our cash on hand, our cash flow for the next 2 years from the current operations, as well as the debt plug, about 60% of capex to fund it. So you can most likely fund this without any external capital or equity raise. We have options and warrants, a significant amount between Eric Sprott and other investors sitting between $2 and $3 a share. That brings in another 40 million of capital, and so we can avoid an equity raise to actually bring this online. I mean, that is certainly our plan. Not to say we would never raise equity, but the current valuation where we're at today at circa 150 Canadian, with that kind of cash and this profile, we don't need to dilute ourselves at these levels. And we're owners. We own 20% of the company. Did I miss the first question, Per? I can't remember.
No, it's very good. It's very good. I mean, the only other thing was, would it lead to any dilution in terms of the all-in sustainable? But good answers on the other ones otherwise. Thanks.
Well, I can tell you that it's probably going to be a bit higher than the $750 all in, or $700 that we see on the heap leach. Another company, Erdene, did a feasibility study at about $750 for a new build in the southwest of the country. My guess is we can be there or just a bit higher, add $100 to be safe, and that's probably where you're going to come in for all in. So somewhere sub 900 is my guess.
Martin French.
Hi. Yeah. Hi. I'm just looking at your share price chart here, and sort of over the last sort of 8 to 10 months, it's kind of been flat and actually gone down quite a bit in a really good market. So given you've got such a great story, how do you account for a relatively poor share price performance? And why do you think it will perform in the future?
Sure. Well, we actually ran up pretty quickly before that leveling off. So we were 90 cents and went up to $3 up to the summer. So you would have seen a little bit of catch up and then softening of the market. And that was a general. We are a junior. We are a new producer in ramp up. There's still risk from a balance sheet, from operational risk, COVID risk. So I think there's still that kind of wait and see that we were kind of stuck in while the general market came down as well. So I think we have a strong base with our own cash on hand and cash flow that we're not too concerned about the day-to-day pricing. We will close that gap on a re-rate. We have more banking coverage. Stifel GMP launched on us after.
Sorry for that, Aneel. Time is over. Sorry. Okay, thank you very much. Great questions. Thanks to the judges. And thanks to you, Aneel, for the presentation, of course. Then we move to our second company, and this is Cartier Resources with Philippe Cloutier. Philippe, are you ready? Where are you? There he is.
Right here.
Super. When you are ready, I will start the countdown.
I'm ready.
Okay, please go for.
Yeah, thank you. My name is Philippe Cloutier with Cartier Resources. I'm president and CEO. We're listed on the TSX-V with the ticker ECR. We explore for gold in the Quebec portion of the Abitibi Greenstone Belt in Canada. And our business model, we're focused on generating the new mines, the new generation mines here. In the last bear market, we were very fortunate. We acquired 4 gold deposits, one of which is a past producing gold mine. And that is our flagship. The Chimo Mine Gold Project is situated on the Larder Lake Cadillac Fault near producers and qualified workforce. In the last 3 years, we've completed 60,000 meters of diamond drilling. We have demonstrated the depth extension of the mineralization. We've made a new gold discovery. We've tabled 2 resource estimates. We're on the verge of filing a 3rd. We've done engineering studies, and that will lead us to a PEA. The project obviously benefits from proximity to the local Val-d'Or mining camp infrastructure, as well as the qualified workforce. Itself has a shaft down to 920 meters vertical and 7,000 meters of drifts on 19 levels. There's a 25 kilovolt power line to within 300 meters of the shaft collar, and also obviously access to the numerous mills of various capacities run by senior gold producers. As you can see on this map, just north of us, the 3 other deposits that we own are in the emerging gold discovery belt. One of them, the Benoit project, we tabled a maiden resource estimate in December 2020. And we currently, we launched a 30,000 meter diamond drill program, which is currently in progress and will run till the end of the year. Hopefully we'll have news for our 2 other assets as well. So in 2021, with $12 million in cash, we have the financial capacity to reach our objectives. And our value proposition is that for 2021, we will reward our shareholders. So that's my pitch and my buzzer.
There he is. Thank you very much. Please clean the screen. Thank you. And I don't know, maybe George, you want to ask a question first? Yes, you raised your hand, please.
Yeah, sure. Just simple question. You've got $12 million of cash. How long does that last at the current rate of spend?
The general G&A is $600,000 per year. Our drill program in progress is 7.6 million. We'll have about $4 million left at the end of the year.
Yeah.
Great. Yes, Mark.
Yeah, hi there. You mentioned that your objectives for the year. Perhaps you could just maybe talk a little bit more about your objectives for the year in terms of the resource and the scale of the resource and mineralization you're targeting to bring in. A bit of arm waving would be great.
All right. The Chimo mine is a past gold producer, just under 400,000 ounces historically. Our first 2 resource estimates chalk that up to 1.2 million ounces. We're targeting, above 1.7 to perhaps maybe 2 in the next resource estimate shortly, within the next few weeks. And then the price tag event is the preliminary economic assessment. A bit of arm waving. Well, listen, this is a past producer, so it has a wealth of historic geological data, metallurgical data, production data. So that provides the practitioners or resource estimate people and engineers with some tight constraints to, come up with the valuation on the project.
Yeah, Per, please.
2 questions. Can you talk a little bit about the grade profile of your discoveries so far? And also in terms of the old mine, how much do you think it would take, both in terms of efforts and capital, to turn that into a producing mine again? And why was it shut down? Was that because of grades, or what was the issue historically?
Very well. I'll start with your last component. The mine was shut down in 1997 not due to lack of ore, but simply because the price of gold was about $400 or $500 Canadian. Step number one. Step number two, when this thing was launched or purchased by Cambior in the 1980s, the economic and technical setting at that time was absolutely not the same as now. And alluding to the grade question that you had, there's 3 gold corridors on the project: north, central, and south. The north and the south are relatively high grade, 8 to 15 grams per ton, but thinner widths. The central gold corridor, where the bulk of the production was, ranged from 3 grams right up to 7 or 8. The approach here is to look at the lowest possible cutoff grade to recuperate the maximum amount of ounces.
Next one. Who has a question? Yes, please, Joe.
So so the overall bulk grade is between 3.8 and 4.5 grams, which seems kind of low for, I'm assuming, all underground. But are the widths, like, do they make it economic? Are you doing sub-level open stoping or something like that in the lower grade versus the higher grade stuff where you might be doing cut and fill? Is that where you gain the economics?
Well, that's a very good question, Joe. We have internal engineering studies are actually looking at various different stope configurations and mining scenarios, but the widths can reach 2 grams over 40 meters and up to 45 meters. I want to remind people that just down the highway, Goldex is mining 1.5 grams per ton at a depth of 1.5 kilometers, and their cutoff grade is 0.9. So in the next resource estimate, you'll see a sensitivity table showing the various amounts of gold that can be extracted. It's really a bulk mining underground situation we're looking at.
Just as a follow-up question, like with these technical studies that we're seeing coming out and where the gold price is, what kind of gold price do you think is going to be used to drive, 1, the resource pit, and then 2, the economics?
Well, the resource the price of gold in the last resource was $1,300 US. The practitioners will be using, I think, an 18-month average in their next one, from what I hear. And one little point I'd like to make here is that the mineralized material at Chimo is amenable to ore sorting. And so we're able to double the grade or half the tonnage once you bring out this mineralization at surface. And then you've got optionality feeding it to the various mills. I mean, there's 2 mega mills down the highway, the Goldex and the Yamana Agnico Canadian Malartic. And then there's a slew of smaller mills that could take, various grades and tonnages. So there's optionality. I think the value of the project is not only the ounce count that we've generated, but the various scenarios moving forward. And there's quite a bit of competitive tension locally. I may add that the last 2 M&As in the area were 2 juniors taken over by 2 majors.
Okay.
Yes, who is the next? Yeah, Martin, please.
Yeah, hi. So you're currently valued around about $60 million.
Yes.
And presumably the reason you're here is because you believe you're worth more than that. So what do you think the company should be valued at? And can you explain and justify whatever that figure is?
Well, good point. Our intrinsic value is low, and if you just assume, let's say, 2 million ounces, and you just look at the recent transaction price on the gold ounces that were purchased on the Cadillac Fault, that range between $100 and $150 per ounce. If you assume 2 million ounces and $100 per ounce, you're looking at $200 million. With the cash in the bank that we have, we should be trading between 62 cents and 89 cents, yet we're trading at 30.
And why do you think you're not trading up at that value?
We've been extremely focused on the technical, extremely weak on the marketing. I think the third resource estimate will give me all the reason to go out there and to blast my horn.
Very good. Thank you.
Thank you. Who has the next question? Okay, guys, don't be so shy. 1.5 minutes still to go. George?
Yeah, I've got a question, Philippe. I mean, obviously you want to prove it up. Is it a question of, I mean, do you really envisage yourself bringing it into operation or selling to one of those neighbors?
No, I've been through that before. It's quite a task to bring something into production. There's 6 other producers on the highway: Nico, Yamana, Hecla, IM Gold, El Dorado, and West Dome. We're quite busy trying to detail the second resource assessment for Benoit. Chimo could still grow through drilling, definitely. If we did that, we'd have to raise more cash, and we'd have to delay the price tag event another year or so. I think it's time to reward our shareholders.
Last question. Yeah, Joe.
So your scoping study, is that going to revolve around a toll milling scenario, or are you going to actually, your scenario is that you're producing it at site, you're producing the gold at site?
We're going to consider all the scenarios since we have the luxury of doing that. Find the best buyer.
Okay, but the economics of the scoping study is going to be based on you producing it at site. Is that what I understand?
No, if you produce it at site, you have to generate a tailings pound, and then you have to build a mill. If you toll mill it, you avoid the environmental scar, and you fast track the permitting, and theoretically.
Sorry, guys, that was the buzzer.
Okay.
Thank you very much, Philippe. Well done. Thanks for the questions. Yeah, then we gonna move on with Brendan Yurik from Electric Royalties. Brendan, are you ready?
I am ready.
Please, then get started.
Awesome. Okay. So Electric Royalties is as it sounds. We are a royalty company. We are the only pure play royalty group out there focused on the entire suite of metals required for batteries, electric vehicles, energy storage, really the drive to clean energy here and a decarbonized future. You know, we've got 2 decades really of exponential growth across all these metals. I think it's the first time in human history you have, you know, all these new sets of demands hitting all of these different metals all at once. And, you know, these are very, you know, thin supply pipelines, but we're really excited about the growth profile. You know, looking forward at kind of a 2 decades runway. We've got about 50 million shares outstanding today. Market cap's around 20 million or so. And we have about 2.2 million cash in the bank. We have no debt outstanding. We've got 14 royalties, including we just announced our first cash flowing royalty acquisition last week. And myself and my family combined are, you know, are definitely the largest shareholder, and we own close to 20% of the company. You can move on to the next slide. Royalty business model, you know, we could maybe end it here. There's so many advantages. I could talk about the royalty, you know, business model for hours if we had that. But look, low G&A, don't need to hire a big team to build a big company. You know, you look at Franco Nevada, they're, you know, 25 billion market cap, and I think they only have about 25 people. You know, you look at our portfolio, we had our operators raised about 20 million last year to advance our projects and move our you know, assets along. That cost us nothing because we're not on the hook for development costs, exploration costs, holding costs. There are no holding costs with royalties. The valuation multiples are much better. You know, I like to joke, I could spend the next 30 years building out Rio Tinto, you know, one of the most diversified producers on the planet. You know, and I might trade around 7 or 8 times cash flow, you know, while royalty companies are trading 15 to 20 times cash flow. So, you know, same cash flow, but 3 times a better valuation. Security, you know, if you look at the MTM royalties we just announced acquiring, that's, you know, survived through 2 bankruptcies, right? So, you know, even if management takes on debt at the wrong time, goes under for whatever reason, you know, we're still okay. If you can move on to the next slide. So we have really no geopolitical risk. Almost all of our assets are focused in Canada and Australia. And really we're targeting Canada, Australia, and the US, or Canada, Australia, and Europe, sorry, as jurisdictions, trying to find the, you know, mines that are going to be that next supply for the electric vehicle battery space. And I think we're grossly undervalued relative to our peers. You know, I think the last kind of, you know, point I would make is we're diversified across all these different commodities, and we're diversified across, you know, all these different projects as well.
Thank you very much, Brendan. Great. And now please clear it. Thank you. And now to our judges. Your question, please. Mark is going to start.
Thank you for
Mark,
that.
Please.
It's interesting business model for that. I just explain a little bit about how you are acquiring or creating the royalties. Are you a royalty creator? Are you investing in prospectors and junior mining companies to help them put money in the ground and get a royalty in exchange, or are you buying pre-existing royalties, or how you getting these royalties?
Yeah, sure. So my background is all project financing, finance advisory, alternative financing for the junior mining sector. And it's a good point that you bring up, because if you look at what most of the new entrants are doing, besides the fact that they're primarily precious metals focused, for by and large, they're almost all just consolidating existing royalties. And so that's something that we are a little bit different. We do go out and consolidate existing royalties. We are opportunistic, but we also are looking to spend, about half of our time creating new royalties. So if you look at our Northern Graphite royalty, that's, a pretty good example of that. We put down 500,000 cash, and we created a new gross revenue royalty on the entire project. That's one of the nice things when you're creating the royalties, you can kind of do things right. Make sure it covers all the claims, make sure that you sort out what you're getting paid on. By and large, we're going gross revenue, so straight off the top, there's no deductions. We also have been putting in, options on new royalties, so we actually, have some additional optionality over time to increase that royalty size. So it's going to be about a 50-50 mix, between consolidating existing and us going out there and creating new royalties.
Thank you. Yeah, Per, please. Per Wimmer.
Two questions. How do you go about your, shall we say, portfolio management between the various minerals here, in particular some of the larger ones, say lithium and such like, and some of the more niche ones? How do you go about to make sure that there is a good diversification in there, and because it's not always easy to see what deal you're going to do next, and therefore there's bound to be skews back and forth. That's my first question. And my second question relates to, at what stage in the development of a mining project is ideal for you to step in and tell us a little bit about the dynamics of negotiating a new deal and the security package and all that.
Yeah, sure. So it's some of those smaller items like the security package that might take weeks to hammer out. Whereas the general terms you can hammer out over a coffee. So it is kind of like that. In terms of, look, it's a very interesting space. Obviously, we're chasing, a lot of different commodities. There's a lot of developments in the, technology side, on the processing side. So it keeps us on our toes for sure. But really, when you look at the supply pipelines for all these different projects, they're all very thin, across all these metals, whether it be tin or lithium or graphite. Lithium maybe not so much, but when you look at those projects in good jurisdictions, where you can actually see a group coming in, an end user saying, I would actually sign an offtake agreement with you guys for 25, 30 years, because there's, good standards at home, there's no geopolitical risk, et cetera. There's only so many projects out there that are actually going to fill that gap. And when you look at the growth profile, over the next kind of 10, 20 years, you're going to need all those projects. And so that kind of segues into the answer to question number 2. We really like to get into advanced stage. So, the more advanced, the better. Obviously it means they're, closer to cash flow. But that being said, because there's such a lack of, a supply pipeline out there, we're happy to move a little bit further down. And, if there's a nice established large resource, that we can say, okay, well, there's only maybe 2 or 3 of those. Like for example, our manganese royalty, Battery Hill, there's really only one district in all of North America right now being developed to supply manganese for the EV space, battery space, and we have royalties on 2 of the 3 resources there. So it's kind of, it's different for each, I would say, but, more advanced, the better, obviously, further down the, risk profile. There's like 100 items from, discovery hole through to production, where things can go wrong. So we like to get closer to, production if we can.
That fine for you, Per?
Yeah, absolutely. I mean, perhaps one quick follow-up, if I may.
Sure.
Obviously, you never get 10 out of 10 investments right. Given that maybe some of these niche projects sometimes run into trouble or run out of cash or other options and what have you, what's your risk assessment, and how many out of, say, 10 projects do you expect not to come through? Presumably there's some sort of internal expectations, shall we say. We wish you all the best, by the way, but nevertheless.
Yeah, no, look, I mean, we have to acknowledge that mining is kind of a risky game, and so that was kind of the impetus behind doing it like this and being a royalty company where we're diversified, so basically we're trying to reduce our risk by diversification. And if you look at what we're actually paying, on our first package of deals, we paid about 0.05 times MPV, whereas in the precious metal space, those guys were paying 1 times MPV. So
structural mapping in order to properly advance and get it ready to the drill ready stage.
Sorry, you are here on the open line. Can you please mute yourself, David Longeria? Andrew, can you? Okay, thank you. Sorry, Brandon.
No, sorry. Just kind of lost my train of thought there. Per, we can chat later. You can find my contact details on the back of the presentation. If you have any further questions, I'd be happy to chat with you.
Okay, super. George, you are next.
How much cash are you going to generate?
Hello, David, please. Yeah, thank you. Sorry, George, once again.
How much cash are any of your royalties going to generate this year? And how do you monitor ESG within your investments?
Yeah, sure. So we did just announce our first cash flowing royalty acquisition last week. That's currently on track to pay out about 1.2 million this year. It's operated by Trafigura. It's located in the United States, strategically vertically integrated with the Clarksville smelter, which is the only primary zinc producer in the US. We see some operational upside for them to, increase that royalty revenue for us. They're not doing it for that reason, but, up to kind of, 2.5 million a year potentially. And they've got about 15 years mine life there. That's the only producing royalty that currently in our portfolio. We still actually need to raise some financing to close on that. But, we have some other ones in the pipeline that we think could be in production within the next, 12 to 18 months. We've got a shovel-ready graphite project, Vista Creek. They're basically looking for an offtake agreement and they're ready for project financing. All the permits and stuff are in place. And we've got the Oche lithium project in Quebec. Piedmont Lithium just made a very big strategic investment at the corporate and the project level. And they're actually in the process of buying or bidding on the Canadian lithium mine right next door. And the plan would be to basically blend ore from the Oche project. So that would really expedite production, 12 to 18 months out and bring on a second cash flow royalty for us.
Perfect. Thank you very much, Brendan. Thanks to the judges. Thanks to your
Thank you very
presentation,
much.
of course. And yeah, last but not least, now we have JC St-Amour from Infinite Ore. Are you ready?
Yeah, Infinite Ore. Sorry, start now?
Please get started.
Infinite Ore is a Canadian exploration company with a market cap of $12 million that offers exposure to gold, base metals, and lithium. You get that through two compelling assets that are both in proximity to major discoveries. Both have resources that are open and able to grow. And both properties have the ability to find additional deposits on them. Either one of these assets is a compelling reason to invest in Infinite. Our Eastern Vision project is located near Red Lake, Ontario, which is a well-known mining camp. It covers large portions of the Confederation Lake greenstone belt, which historically was explored primarily for base metals, but with gold largely ignored. Great Bear Resources' recent discovery of a large high-grade gold deposit in essentially the same volcanic rocks as that underlie our properties give us, indicate the potential for gold in this area. And with that in mind, we're currently drilling a 2,500 meter drill program to test a couple of gold targets that we've identified with geochemistry and geophysics. Beyond that, we have a number of base metal targets on these assets as well, including around our existing 2 million ton VMS deposit, which is also open and growing. This story here is analogous to that of Amex Exploration, who were exploring in an area just like this, where base metals was a focus in the past and gold was largely ignored when they made their high-grade gold discovery. And a lot of the people involved with that discovery are on our advisory board assisting us in our efforts. For the next slide, if we go to our Jackpot Lithium project, it's located near Rocktech Lithium's Georgia Lake project. And what's significant about that is that Rocktech recently announced their intention to build a processing facility in the port city of Thunder Bay, Ontario. And having a processing facility nearby would open up some development opportunities for our deposit, which contains a historical resource of 2 million tons grading 1.09% lithium oxide. That deposit is open in all directions, and I could use your $1 million to determine exactly how big this thing could get. It's a series of stacked dikes that are shallow dipping and could easily could be mined fairly easily. Beyond that, there's a number of lithium showings across this property that could themselves be deposits, and we'll follow up on those. In short, Infinite offers investors a great upside to any exploration success, and offers a good value for the resources that are currently within the company. Thank you.
Thank you very much. That was perfect in time. I like that. Thank you. Please clear the screen. Thanks. Yeah, now 8 minutes for our judges with questions. Who is raising the hand? Who wants to be first? Hello? Yeah, Joe, please.
Just to get an understanding, I mean, diversification is always a good thing for somebody who's managing a portfolio, but lithium, I get the gold and base metal link with your gold-rich VMS systems, but lithium is obviously a different type of geology, different type of deposit. So in terms of your team, you've got the expertise, I gather, in both. And then the next question to follow up is capital allocation. So you might have investors that are more interested in lithium and the other ones are more interested in the other one. So how do you manage that expectation?
That's right. Like, our primary focus is on the Eastern Vision project, which is the base metal and gold focus. That's where we're currently drilling, spending most of our money. On the lithium, we're spending enough to maintain the claims. We're actually flying a high resolution mag survey on there right now to help us focus our efforts. But we are also looking at, I understand that not everyone likes to mix and match assets so much. So we are looking at options to realize value for either one of the projects and maybe spin them out into two separate companies. Either one could sustain a company on their own. Like I said, the primary focus is Eastern Vision right now with the gold and base metals, and the Jackpot project. We'll see which direction we go there to add value for shareholders.
Great, thank you.
Mm-hmm. Yeah, George, please.
Yeah, how much cash do you have, and how long will that last?
We're just over $1 million right now. Our current drill program will be on the order of 400,000 to 500,000. So we're good for beyond this program for sure. On top of that, we have a number of warrants that are sort of at the money right now. That would bring in, if all exercise, $4 million. And we have access to the flow-through market here in Canada as well, so we could potentially raise some more money for additional exploration. So.
Thank you.
Martin? No, please put on your microphone, Martin.
Thanks, sorry. Yeah, could you tell me a little bit more about your VMS camp? Is this a camp that's been sort of known about for some time, or is it newly discovered? Has it been, how are you going about exploring?
Yeah, it's been explored for a long time, actually, since probably the 30s or so. There's a number of companies that have been there. A lot of the exploration was done in the 50s and 60s. With our Garnet Lake project, for example, that one is more recent. It was drilled out in the early 2000s. The area is well known as a base metal area. There's a number of small VMS deposits that are scattered around this greenstone belt. And I think there's potentially a play there where you can, there's a possibility of building a central mill to process a number of ore from a number of these deposits. We've consolidated a number of these so far, and our plan is to continue to explore and see how much more we can add to these to see if we can get it to get the economies of scale to work for a central mill here.
So you're saying it hasn't really been explored for the last 20 years or so, is it? I mean, and why is that? Because most VMS camps, they get kind of picked over pretty quickly.
Yeah, no, it was explored in the 2000s up until about say 8 years ago, 8 or 9 years ago. The resource actually on our biggest resource was calculated in 2017 actually. In the last 8 years, you know, the way the mining market and the way the access to capital was basically lacking, there wasn't a lot of work done on these properties. What I did say is on the gold side, there's been really no exploration done for gold, and you know, because the past exploration was always focused on base metals, gold was pretty much an afterthought. So there was no program dedicated to finding a gold deposit. So that's what we're turning our attention to here at the same time. So there's two avenues we can take here, you know, exploring on the base metal side and also on the gold side.
Mark Burridge, please.
Yeah, hi there. Thanks for that. Can take us a little bit through the geological model for how you target the gold. You obviously, you know, $500,000 budget doesn't go very far for the size of land package you've got, or even 1.5 if you win the $1 million today. So how do you eke that out over such a large land package for, you know, for let's say theoretical targets? If you perhaps run us through that, gives an idea of how close you are.
Sure. Like, the way we've identified these particular targets that we're drilling now is using a geochemical method called SGH, spatio geochemical hydrocarbon method. The overburden in this area is fairly thick. There's very little outcrop, so it's, you know, traditional methods like using till sampling and so on aren't very effective in this area. And this SGH method was used by Great Bear Resources actually, and they credit it to identifying a number of their zones in their discovery. So we've tried it on a small portion of our properties. We came up with these targets, which we're drilling now, and then based on those results, we may apply that method to more broadly on the property to identify more targets, either for gold and or other metals as well, because it does work for various metals. So.
Thank you. Who else has the question? Then maybe a question from my side, as we have still 1.5 minutes left here. You said you're gonna do probably $4 million in exercise of warrants. So where are the strike prices exactly, and what would that mean for dilution? As you said, you have a $12 million market cap.
That's right. Well, the company has 130 million shares out right now. We're trading at about 10 cents or 11 cents or so. The warrants, there's a number of them at 10 cents. They would bring in quite a bit. It does involve some dilution, but you know, if exercised, we're more than cashed up to finish all the exploration on our projects for the next few years.
Mm-hmm. And that would mean also for 2022 then, right?
That's right. They expire. Yeah, they expire at the end of next year. Yes.
Mm-hmm. Okay, 30 seconds left. Quick question. Yes, Martin.
Yeah. Could you explain what's happened to your share price? It's gone flying up and has now come straight down again. What's going on?
I think you know, I think there was a bit of you know, with this whole Reddit thing with GameStop and that's happening in the US. There's been a bit of that happening in the lithium market, and I think that caused a bit of an anomaly there in our trading. You know, for a few days when you know, people were trading lithium just for the sake of trading lithium.
All right. Thank you very much. That was the presentation. Thanks, JC. And thanks to our judges here. Yeah, and now we come to the voting. And I would like to ask first Mark Burridge from Baker Steel Capital, to whom do you want to give your $1 million, and maybe in 2-3 sentences, why, as we are running out of time otherwise.
Yes, thanks, Jochen. Thanks, everybody. You know, as usual, a good selection of companies and a hard choice. So, but rather go the pros and cons of each company. I'll pick my winner, which is Steppe Gold. I think they've done a good job of working in a remote location, or gaining a social license there to build a mine, getting government support, and doubling the size of the resource at the same time as building a mine. Have a clear plan for going forward. And it looks like they've got more to explore on their 20-kilometer trend. So hopefully they'll focus on that. You know, so look forward to following that story. But I will be following the other three as well. They've all got some very good merits. So thank you.
Super, Mark. Thank you very much. Next one is George Cheveley from 91, to whom you want to give your virtual million, please.
Yeah, thank you. And thank you, everybody. Very interesting set of presentations and very different focuses on all of them. Again, I'll cut to the chase. I would give my $1 million to Steppe Gold. I can see proper cash flow generation there, which I always like, and plan to expand that. Do have some concerns about Mongolia, but again, I think it's been demonstrated that you have a good local and government support, which does bring some comfort in what can be a difficult country. The others, I think I'd need to have more comfort about longer term strategy and how you're going to generate cash. I think it's a very difficult market at the moment to just hope someone's going to come and buy you. And just develop something and hope somebody will pay top dollar, because people are very wary of that these days. So I think really being able to demonstrate you can generate cash and go it alone without multiple financing is a key thing to be able to do.
Super, George. Thank you very much. Martin French from London Specialist Capital. What's your choice for the million, please?
My choice is Infinite Ore. You know, and I'm looking for absolute returns. It's got the lowest market cap. It's obviously got quite a lively shareholder base, and I like VMS. I think VMS exploration projects are benefiting from advances in technology and techniques, and this one doesn't seem to have been picked over as much as it should have done. So I'm taking my bet on.
Great, thank you very much, Martin. Then we have Per Wimmer from the Wimmer family office. To whom you want to give your million, please?
I allocate $1 million to Steppe Gold as well, for pretty much the same reasons as my fellow judges have very eloquently expressed. But not to say the other presentations were also very, very good and well presented, etc. But I refer back to the other comments about, you know, stage and cash flows and focus, etc. But very much very good presentations. But yeah, Steppe Gold is the winner here.
Okay, super. Thank you very much. And then we have, last but not least, Joe Mazumdar from Exploration Insights, to whom you want to give your virtual million, please.
Yeah, I think I would go with Steppe Gold as well. I like the tight share structure, given that they're already in production. That's a pretty good management of capital. I'm not a fan of Mongolia, but they seem to be doing a good job with getting government investors and also having the government give them debt. And I remember at Newmont that if we got local debt, that ended up being a lot cheaper than trying to get international debt. So if they can manage that well with their 150, that looks pretty good. So yeah, I would give my $1 million to Steppe Gold.
Super. Thank you very much, Joe. Thank you very much to all our judges here for voting and asking good questions. And also thank you very much to our contestants. Well, that's a very clear thing. 4-1 wins Steppe Gold. Aneel, Waraich, thank you very much. You are the winner. And you will be in the final on 25th March, 2 o'clock London time. And we will have 2 more pitch battles this week, which will be on, let me see my list here, Jesus. The next one is on Wednesday, 17th March, 2 o'clock London time here. And we have, no, sorry, that's not London time, that's 7 o'clock in the morning. And then we have the third one is on Thursday, 18th March, 5 o'clock London time. Hope to see you all there. Thanks to everybody. That was a great pitch battle, and well done to all of you. And it really does not mean that somebody lost really something. It's always great to have interesting stories here, to have interesting pitches, and that's what makes the show go round. And wish you all the best. The most important thing is please stay healthy, have a good glass of red wine, have some gin tonic, because COVID does definitely not like gin tonic, that's for sure. And hope to see you all soon, and keep well. Thank you very much, and bye-bye.
Thank you.
Bye. Thank you, everyone.
Thank you.
Thank you.